Brad Williams, Frugal Finance, talk about precious metals, commodities, golden rules for investors, what to know before buying physical precious metals. There are a lot of ways to gain exposure to metals such as silver, gold, palladium, and platinum. There are commodity futures, mutual funds, and exchange-traded funds, but investing in the physical metal can carry a lot of allure for some investors looking to diversify their investment portfolios. Investing in gold and other precious metals, and particularly in physical precious metals, comes with risk, however, including the risk of loss. While gold is often considered a safe haven investment, gold and other metals are not impervious to price declines. Know the risk associated with trading of these types of investment products. Additionally, investors should be aware that direct investments in precious metals are not covered by the Securities Investors Protection Corporation, as physical precious metals are not registered securities. These 5 golden rules can help you avoid problems when it comes to investing in precious metals. Say no to pushy salespeople. Investing in physical precious metal comes with the risk of encountering high-pressure sales tactics and even fraud. Remember, no reputable investment professional should push you into making an immediate investment decision or tell you to act now. Even if no fraud is taking place, this type of pressuring is inappropriate. Be particularly wary of unsolicited telephone calls, persuasion tactics, such as dangling the prospect of large profits, the phantom riches tactics, or implying there are limited quantities of an investment available. Playing the scarcity card are often played. Check out the salesperson's background before you invest. There's no centralized, regulator-approved list of gold dealers, but just like other businesses, you can find some gold dealers accredited by the Better Business Bureau. The U.S. Mint, meanwhile, maintains a searchable database of coin sellers. The National Futures Association Background Affiliation Status Information Center will tell you whether a firm or individual is registered and whether they've been subject to any disciplinary actions. And it's always a good idea to check an investment professional's background using FINRA's BrokerCheck to do a general internet search. Be on high alert when you hear low risk. Don't fall for a pitch that investment in physical metals are safe or not risky. Storage charges, price fluctuations, and the use of investor loans to finance the purchase of metal bars, bullion, or coins are just a few of the risks associated with an investment in physical precious metals. Ask for a risk disclosure statement from the salesperson before you send any money, and request the salesperson's name, address, and telephone number, as well as that of the firm. If the salesperson says no, end the conversation and find another seller. Look out for leveraged risk. Precious metals investments often involve the risky and expensive use of leverage, which is borrowed money. They pay a portion of the cost to invest in precious metal in cash, but then pay for the rest of the investment on margin. In some cases, this margin portion may be up to 80% of the metal's precious price. This is a loan that carries interest and is subject to the risk of margin call if the value of the investment declines. In the event of a margin call, you may be required to invest additional money to prevent your investment from being liquidated without your consent or prior notice. Get a full accounting of fees between accounting opening fees, commissions that can reach 15% or more of your investment, including any leverage portion, storage fees, management fees, and ongoing interest on the loan for the leverage portion of the precious metal purchase. It can be a challenge to make money on investments in physical precious metals. Before you invest, make sure you understand all the costs, what levels of return you expect to earn to break even. Comment if you invest in physical precious metals. Clearly, the last 18 months, seen this radical bull market in the gold industry, and in that, you've probably made a lot of money. But on the other hand, if you've been a long-term holder of gold, you voice your opinion. Has it been competitive as the S&P 500? Are you using it as a hedge? Do you have any tips on how to go about buying gold, silver, platinum, what have you? Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.